Hello everyone, thanks for joining this stream. We'll be talking about funded accounts today, scaling up your trading capital. I'll be speaking with Ahmed and he'll join the stream in a little bit. But just a rough outline first, I'll be explaining what exactly funded accounts are and why they're useful for your trading and to grow as a trader. Then I'll talk about how exactly it works in terms of the rules for the challenge, as well as trading on the funded account. And to sort of demonstrate the use of how to scale up your capital, I'll sort of go through a long-term plan to scale up, starting with $100. So it just shows that even if you don't have a lot of capital, if you've got the right skills, you can be rewarded greatly and earn quite a bit of profits over the long term, of course. And lastly, pretty much be talking about the best approach to getting funded. So this includes the very important risk management, how to find consistency in your trading, and just some tips and the game plan I gathered from my own experiences. So I wanted to talk about funded accounts because it really has transformed my trading journey. Previously, I was trading on a personal account on Bybit, Binance, or whatever, and it was kind of just no sense of direction, right? Don't really have a super large account and just trading for fun, trading just to learn how to better analyze, things like that. But with funded accounts, just with a payment of $250, $400, something like that, I was able to trade a much larger 100k account. And using that account, I can go for 8%, 10% profit targets in a month or two and be able to earn much more than what I was getting from trading on a personal account. And you can see here, this was my recent payout on my 100k funded account, which was the first payout after 15 trading days. It took me about a month to pass the evaluation. So you can see that the time span actually isn't too long if you have the right skills and if the market conditions are favorable for your trading style. Okay, so just a little bit about what funded accounts are. So the idea is that you pay an one-time application fee and need to pass a two-phase evaluation to trade on a funded account. The gist of it is you must reach 8% profit target without going below 10% drawdown in phase 1, and in phase 2 this target changes to 4% with 10% drawdown limit. Once you pass this challenge, you're able to trade on whichever account you purchased. Right, so you paid $500 for a 100k account, then after passing these two phases you can trade on that 100k account and keep 80% of the profits you make. Right, so $500 to $8,000 is what happened with me, and you can see just how good of an opportunity it is to use funded accounts and how good it is for traders nowadays. Okay, so my example previously, so $520 to purchase the 100k challenge, and then after passing the two-phase evaluation, even a 5% profit target in a month is a $4,000 payout. And all you need to do is just be in profit for a payout, and you can request a payout every 15 trading days. Do have to warn you all though that as with anything in trading and financial markets, there is a risk, and this risk is the application fee that you pay for the evaluation and also the time and effort you put into trading on the account. And it's not easy to pass the two phases. The stats show that there is about a 90% fail rate for traders in the more popular firms. So definitely it's important to understand how everything works, assess if you're ready to take on this challenge, and that's what I seek to do in this stream today. So let's have a quick look at the rules for a funded account, as in the evaluation and also after you pass the evaluation. So as I said before, phase 1 is 8% profit target without going below 10% drawdown. And there's also a 5% maximum daily loss. So let me go through that in a bit. Phase 2, it's 4%. So you start again at the initial balance. So if you purchased a 50k challenge, you start again at 50,000 and you have to reach 4% profit, so $52,000. And that's also without going below 10% drawdown and without breaching any other trading rules. After phase 2, and once you have reached the 5 trading day requirement, you receive your fund account credentials and you can trade however you want, as long as you don't go below 10% overall loss and don't breach the daily drawdown limit. Alright, so that's pretty much it. If you have any questions about these rules, do let me know in the chat, but be sure to understand this very well. So yeah, a lot of people get confused over the daily drawdown limit. So the 10% limit is straightforward enough, right? It's a static drawdown from the initial balance. So 50k account can't go below 45k, 100k you can't go below 90k. Daily drawdown's a bit more complicated because you can actually breach the rules whilst being in profit. Right, so how it works is it looks at the opening balance of your account at 12:05 a.m. UTC each day, and this number is updated on the trader dashboard. And this balance considers closed trades only, so any floating profit and loss is not accounted into the opening balance. So based on that opening balance, you can't go below 5% loss, and that's based on account equity and takes into account floating profit and loss of open trades. Right, so let me just give an example. Say that you're currently $51,000, so that is 1k in profit, and this is the balance from like where trades are all closed, not taking into account floating profit and loss. So with 51k opening balance, you can't go below 48,450, and that includes floating profit and loss. So say if you open a massive position and it goes into $3,000 drawdown, a bit over that, then you'll be breaching the daily drawdown limit. So do be aware of that. A lot of traders actually forget about this rule. So if like they go into some revenge trading or try to make back losses all at once, you're in danger of breaching the daily drawdown limit. So make sure to check your dashboard, be aware of that number, and just stop trading for the day if you're close to breaching that limit. There's also some other rules you should be aware of. So the firm that I recommend, Crypto Fund Trader, does not allow hedging. So that means you can't long and short the same asset at the same time. So you can't open a long on Bitcoin and then open a short right away. However, the rule does allow you to long Bitcoin and short Ethereum or whatever other asset. So going different directions in different assets is all good. And then there's a exception. So if you long Bitcoin, wait 24 hours, then you can short Bitcoin at the same time. So that means you can have a long and short open at the same time, given that you wait 24 hours after the first trade. But nonetheless, don't recommend risking it. So just make sure you don't accidentally hedge. You can't be cheeky with some reverse trading. Some traders try to get around the rules by just opening a massive position on one account and then the other direction on another account, right? So that way the market moves, one account fails, one account passes. You're not allowed to do that. They have an automated system to detect reverse trading, and you'll lose your account right away if that is what you do. And lastly, there is a $10,000 daily profit limit for funded accounts. Most people don't really have to worry about it, but just be aware of that when you're deciding a position size. Right? Say that you got a 100k account, you want to just do a quick gamble, don't really care about the long term, maybe just want to make a massive profit in one go and just withdraw, call it a day. Right? There's a 10k limit, so if you make 20k profit on a single trade, you only get 10k out of it. So just be aware of that. So I do recommend Crypto Fund Trader as crypto traders because they do have a platform MetaTrader 5, which is very suitable for us crypto traders due to just a very low spread and very nice trading conditions. Right, spread refers to the gap between the buy and sell price. A lot of other firms aren't that favorable for crypto because there is a large spread. So if you open a position, it's in loss right away because of the gap. And also, a lot of other firms don't really have much crypto pairs. Usually it's just Bitcoin, Ethereum, Litecoin, and XRP. In Crypto Fund Trader, we have over 100 altcoins you can choose from, and all of them have tradable conditions, as in like low spreads. And lastly, Crypto Fund Trader does allow 100 times cross margin leverage, so you can open a position size up to 100 times your account balance. So if you have a $10,000 account, you can open a $1 million trade, right? And that's just like the flexibility that is really good for us to use. Whereas most other firms have a 2 times leverage for crypto pairs. If you look at the website, there's also the option of a one-step evaluation. So the rule for that is you reach a 10% profit target and you're done. You've passed the evaluation. The catch though is that the drawdown is based on trailing drawdown and not a static number. So this means that the drawdown limit follows the profits from closed trades. And again, you can fail the evaluation whilst being in profit. So for example, if you got your account up to $52,000, the drawdown limit is 6% below that. Right? It's no longer 6% below the opening balance of $50,000. And I'm not sure if Crypto Fund Trader has this rule, but a lot of firms with their one-step challenges, they include withdrawals. So you just straight up lose the account if you withdraw more than 6% of your balance. So if you withdraw something like $6,000 from a $56,000 balance, you've reached the trailing drawdown limit from the withdrawal, which is kind of stupid, which is why I prefer a 2-step approach, the 2-step evaluation, because you get to keep trading on that. You can continue trading from the initial balance after withdrawal, and everything resets back to minus 10% from the initial balance. Right, so everything all clear so far with the evaluation rules. Any questions, just let me know in the chat. Right, we can go back to that if anyone's confused, but let's move on. So I wanted to just talk about an example of how funded accounts can be life-changing if you have the right set of skills. And it doesn't really matter if you don't have like a lot of capital to start with, right? So I'm sort of going through an extreme example of like just the starting capital of $100. But yeah, obviously it's a lot easier if you have a higher starting capital. So if you have $100, there's a few approaches here. So you can flip the account to $200 with concentrated high probability plays. So some of our traders in the Discord do have a lot of experience with flipping accounts like that. For example, Peter and Ahmed has done it as well. I'll have him speak to you guys in a bit to talk about trading on smaller accounts. Right? Well, pretty much what I mean by concentrated high probability plays is just waiting till the ideal market conditions. Right? For example, like trending conditions where it's very easy to just take long and then close out in profits. So you wait for that and you risk like about 20% of your portfolio, about 2 to 3 risk to reward, and in about just a few trades, given you win those trades, you will have flipped your account to $200 from $100. So this would take about maybe 1 to 2 months, or maybe even a week, just depends on the market conditions. And then with that $200, you can purchase a $25,000 challenge using a 5% off code, 5OFF. And then after purchasing the challenge, you work on passing the valuation with patience and quality setups. So a bit differently to flipping the account. You take your time with your trades, make sure you follow your trading rules and trading setups, and I'll talk more about those things later, but just going through an example plan for now. So you try to pass the evaluation 2 phases. It takes about 1 to 3 months. And after getting your funded account, you can target just 3 to 5% on that account for your first payout. Right? So risking 1% of your portfolio, that will be just 2 trades with 2 risk to reward. Or if you're risking 0.5%, that will just be 4 trades with 2 risk to reward ratio. Right, so you just take your time with that. It takes 1 to 2 months, and with that you can earn yourself a $600 to $1,000 payout, and with that you can purchase a 100k challenge. Right, and with a 100k account, you can sort of see the profit numbers you can generate. Right? My first payout was $8,000. So you can see just on a time span of 7 to maybe 12 months, you can substantially transform the trading capital you're working with. Alright, so I'll go back to that in a bit. I'll ask Ahmed to share his insights and experience on trading a small account. If you want to take the approach of flipping a small account and then using that to purchase a challenge. Moving on now to risk management. This is probably the most important part of trading a funded account. Right, in trading a personal account, it's pretty common to just use a same position size for every trade. So maybe like risk putting in $100 margin for every trade, and then the position size changes based on your leverage, and the amount that you risk changes based on your stop loss distance. In contrast, funded accounts, we recommend that you use a fixed risk approach. So this means you risk 1% of your account on each trade. That means you lose 1% of your portfolio if the stop loss hits and the trade setup is invalidated. We have in chat, why not go over live trading actions? Yep, that's something we'll be doing in future streams. Actually, in the last live stream, we did go through some live market analysis, which played out nicely. But it is the weekend, and I'm taking the weekend as an opportunity to share the knowledge of funded accounts. So going back to risk management, just a fixed 1% risk. And to calculate the position size, you can use the Cashback Forex lot size calculator. So you select the instrument. You don't really have to change it, to be honest. You type in the opening price and your stop loss price. Type in your account balance and the amount that you run to risk, 1% or 0.5%. Right, you click calculate and it tells you the trading size. So for this trading idea with this particular stop loss, entry, and risk allocation, the position size is 339 RVs. So you can adjust the amount you risk depending on multiple factors. So if you're doing a scalp with a very tight stop loss, then by definition that trade is more risky, as in more likely to fail. Right? So with that in mind, you may want to reduce the risk to 0.5% instead of 1%. And do the same thing times 0.5% instead of 1% in the calculator. Right? And with scalps, naturally, the position size will be much larger, and that's just something to get used to. And then further factors to adjust your risk setup. If you enter into drawdown, so if, for example, if you lose the first few trades you take, then you might want to consider reducing the risk allocation, right, to give yourself more breathing room before a breach. So some people, what they do, so if they're halfway through to the max drawdown limit, for instance 50k account, they're at 47,500, so they only have 2.5k to go, they'll reduce the risk of they take in each trade to 0.5% instead of 1%. Right? And conversely, if you're decently in profit, you may consider increasing the risk amounts on high conviction setups. So instead of 1%, you can do 1.5%. Right? That's something just for you to experiment with, and just use what works for you. As I said before, always keep in mind the max daily loss limit. So using a 1% risk allocation, if you take 4 losses in a row, then you need to stop trading for the day and wait for the daily reset. Alright, so always keep that in mind. Sometimes your trade might get stop hunted, so the trade setup and idea is still very much valid, but the market is being very choppy and shaky and stop out a trade. You want to re-enter the trade. Right? So if you're considering that, there's a few different options. You can risk 1% again, but this might be dangerous because if your trade was just recently stopped out, then it's probably very close to your stop loss price. Right? So for example, if your stop loss is here, it just got tagged, price is looking to reverse, and your entry was around here, and you're looking for a re-entry out around here instead. If you do 1% risk again, your position size will be like 2 times bigger than before. So instead of doing that, you can actually just use the same position size. So in doing that, you're risking 0.5% instead of 1%. Right? So this kind of just alleviates the risk from perhaps revenge trading or retaking the same setup. Lastly, keep in mind max risk on open trades. So if you're using 1% fixed risk, usually you don't want to open more than 1 to 2 positions at the same time. If you're opening like 10 positions at the same time, risking 1%, then that's obviously very reckless. If the market goes the wrong way, then the account is gone. Right, so keep that in mind. So what I personally do a lot is I'll have one Bitcoin trade with 1% risk and maybe 1 or 2 altcoin trades with 0.5% risk. Right? Altcoins are more volatile, so usually I allocate 0.5% risk instead of 1%. And if I do that, I'm risking 2% on the open trades of my overall account. So if I got the direction completely wrong and every trade gets stopped out, I lose 2% of my initial balance. Right, so those are the things to keep in mind. Now I'll still talk about the actual trading itself. Right, so if you're going to take the leap to trading on a fund account, it's very important to have your own style of trading. Right, so if you're just trading based on guesswork, or if you're just following random signals, then that's probably not a recipe for success. You need to have your own distinct trading style and strategy, preferably as objective as possible. Right, so I've set out the key points that you want to have. So you need to have a defined and objective entry criteria for your trade strategy. So it doesn't matter what sort of trading style you have. You can use harmonics, you can use smart money concepts, you can use EMA crossover and indicators, as long as you have a set criteria for when to enter a trade. That's all good. Right, so personally, I use SMC. So I look for a liquidity sweep, break of structure, and then I enter on a fair value gap or at the OT zone. Next, you need to have defined your trading time frame. Right, so I personally use the 4-hour time frame as an overall outlook, and then the 15-minute for the trade entry. If you're a scalper, you can do 15 minutes for outlook, maybe like 5 or 3 minutes for a trade entry. Right, just whatever has worked for you in the past. You also need to know how you're going to set your TPs and stop loss. So the targets can just be based on support resistance, or you can do fixed risk to reward. Right, using the TradingView tool, just drag the TP to the point where the trade turns into a 2 risk to reward ratio, or you can target like the next point of liquidity, just based on your trading strategy. And then the stop loss should strictly be the trade invalidation point, so the point at which your trade setup is no longer valid and an exit makes sense. Okay, so this could be a market structure shift level, could be the swing level that was just recently swept, or it could just be below a support or resistance. Need to also have other trading rules, right? So going to trade on weekend or not, and are you going to trade like keep trades open during high impact news events? Right, these are all things that you need to have planned out before you take the challenge. And also, I recommend that you understand the strengths and weaknesses of your trading system. Right, so be adaptable to varying market conditions. These conditions change all the time. So, is your trading strategy less effective in choppy conditions? Would you prefer trending conditions? Right? So just make sure that you're only executing trades when the market conditions suit your trading style. So personally, with my trading style with SMC, I prefer somewhat trending conditions, and also ranging environments where there's clear liquidity targets. Right, so in a nutshell, more trades during favorable conditions, less trades during unfavorable conditions. Remember that there's no time limit with these challenges, so take your time. Right, it can take as long as you want. You can take a break whenever you feel like it. Just make sure you're not forcing trades, and that you're not trading recklessly during poor conditions. I also recommend to keep a trading journal. So just keep a record of all the trades that you take. I'll show you an example of my trading journal. I keep my trading journal on Notion. Right? It's a it's kind of like a online journal or database, something like that. And I note down the crypto pair, direction, time, outcome, and outcome in terms of risk to reward. And then before you open the trade, you put in a screenshot of the trade setup, and after the trade has finished, either it's reached target, got stopped out, or you closed early, you put it in the journal, and you note whatever you want, right? So whatever worked well, some things to remember for the future. If you made a mistake, write that down, and make sure not to replicate the same mistake in the future. Right, so for example here, Bitcoin long setup got stopped out, so I noted down what happened here. Right, so the mistake was using a poor break of structure level, so that there was no confirmation of a trend change direction. Right, you can also take notes about your trade management. right? That's actually quite difficult in terms of knowing when to close your trades, when to hold them, and yeah, when to close out a break even, something like that. So this short setup closed a bit early, around halfway to target, and you can see that it scan pumped before going all the way back down to the target. So it took a note that there is scam market movement to be expected on Monday weekly open, and to note that for future trade management. So let me know if you want me to share that Notion template or just anything else about keeping a trading journal. But it's definitely something I highly recommend. Yeah, the external factors that may affect trading, so time of day, news events, energy levels, emotions. Right, so if you notice that like your trades are less effective when you're feeling like really tired after work, maybe look to trade on your days off, or like just wait for market open and when you're more energized. Yeah, sure. I can share the trading template in the Discord server if you're in that. Yeah, I'll look to share that afterwards. And yeah, I think, yeah, I would drink some water, but don't have that with me right now. I think my voice is just naturally raspy sometimes. Alright, so here's a checklist. Are you ready to begin the challenge? Do you have a clear trading plan that you know to be effective? Does it work well? Is it overall profitable when trading on your personal account? Do you have a risk management plan? So are you planning to risk 1% or 0.5% in all your trades, or are you looking to be more aggressive and risk 2%? Right? And finally, make sure you have that mental preparation. So you're only risking what you're willing to lose. That $200, that $400 that you're using to buy a challenge isn't your rent money, isn't like what money you need to survive, right? And just you accepted the possibility of failure. Right? If you're like fearful all the time, if you're very nervous before you take any trade at all, then maybe you don't have the mental preparation. If you're not willing to open any trades, to take any risks at all, then you can't make any profit. That's just how trading is. And I mentioned before, 90% of traders or more fail to pass the challenge. Even less traders make it all the way to payout. Right? I saw like in another firm, the percentage was as low as 2% or 1%. Right? So even if traders pass a challenge, they throw everything out the window, they start gambling, and they lose the account. Right? There's a reason why the payout is only 15 trading days and not whenever you want. The firms are hoping that you breach the account and they don't have to pay you out. That's just how it works. So keep that in mind. Trade differently to everyone else. Right, so let me just go over a few key attributes for why most traders fail to pass the challenge. Firstly, they're lacking a trading system. Right, they don't really have any set trading rules. They don't know what they're doing. They're just trading based on gut instincts and hope. So some might call this discretionary trading, and that's very dangerous and inconsistent if you don't have the market experience. So if you're relatively new to the market, only have like maybe 1 to 2 years experience, then I recommend a trading approach that is objective and mechanical, based on objective rules, entry criteria, and targets. Right, so that allows for less mistakes, and yeah. And also, if you're like a crypto trader, right, there's no point venturing into other markets like Forex, gold, or indices like S&P or Nasdaq, because those markets move completely differently to crypto, and like the approach that you take for crypto might have very different results for other markets. So be aware of that. A lot of traders also tend to overtrade and lack patience, right? They're like very excited to pass the trading challenge, so they look for trades all the time. They don't really follow their trading system that well. They don't wait for optimal market conditions to trade. They take low probability trades. So if you're just rushing into every trading setup, you're lacking patience and you're overtrading, that's one way to fail the challenge. Equally as important is the lack of risk management. I've seen way too often that traders buy a challenge and then they open a massive position hoping to reach a profit target in one go. And we know how the market works with the choppiness, the stop hunts, things like that. More often than not, it ends up in a breached account. Right, saw an example of someone who purchased a 10K account and then they opened a 10 Bitcoin trade. So if Bitcoin sneezes in the wrong direction, the account is just gone. And yeah, they failed the challenge in like a single trade in just 10 minutes. So make sure that's not you, unless you're just going in hoping with some gambling. A lot of traders also lack trade management, so knowing when to close the trades, knowing when to cut losses. It's a very common attribute that traders close out winning trades early and they let the losing trades run out, hoping for a break even. And we all know how that plays out. So enter a long, keeps going down, looks like it might go back to break even. You don't cut the losses, you don't consider the market structure, things like that. It keeps going down, and then the account is gone. Conversely, with winning trades, traders open a winning position, for example, long here, price goes up, they get very excited, and then they close out before their targets, and at a point that doesn't really make sense, right? Maybe the resistance level is here, but you close the trade like far before the resistance level. Right? What commonly happens? Price keeps going up and up and up. They get some FOMO, they enter again, and the market reverses, right? And then they lose out on profits, and maybe even more. And maybe they even keep holding this trade, hoping for a break even, and it keeps going down, and then they breach the account. Right? Make sure you don't do that. And lastly, emotional discipline is also very important. A lot of traders tend to tilt after a loss or mistake. I know I do that a lot, so I'm trying to work on that as well. I end up revenge trading. And what commonly happens with revenge trading is that you just take trades that don't make any sense. You're no longer following your trading rules, your trading system, and you're just trading based on pure emotions and the hope that you make back the losses from a losing trade. Right? You can't really expect to do that and expect it to work out. You need to make sure that you stick to your trading system as closely as possible, and you make back the losses through a proper trade setup and not just through like random gambling. Yeah, please like the video, the stream, if you're enjoying it so far. And let's wrap it up with some overall tips for passing a challenge and trading on a funded account, just based on what we've discussed so far. Right, so take a percentage-based perspective. Right, if you're trading on a much larger account than what you're used to, then the very big numbers can really play with your emotions, and that's hard to ignore. And a lot of people say trade without emotions. That's not really possible, but just do the best you can to take a percentage-based approach and not a numbers approach. Right, like so for example, if you made a mistake and you lost like $500 on your final account, there's no point thinking that, I could have like bought, I could have paid my rent with that money, or I could have like eaten out at a restaurant 10 times with that money. There's no point thinking about that. So think based on a percentage-based system, right? If you keep dwelling on those numbers, keep regretting taking trades even if they follow a system, that might create doubt, fear, maybe other negative emotions, and you just stop taking any trades. So if you're fearful of taking any risks at all, there's no profit to be made. Only trade in optimal market conditions. A lot of people try to trade every day, but that's just not how it works. You can open like a $10 trade on a fund account just to register a day traded for purposes of the payout and also for the 5-day minimum trading days, but only take trades risking 1% or 0.5% if it properly follows your trading system and if the market conditions is suited to your trading edge. So try to practice patience to stay out of the market during unfavorable conditions. Always stick to your trading plan, be disciplined, and avoid revenge trading. Remember that there is no time limit. You can always work your way out of a drawdown and slowly towards the profit target. Right. Remember what I said before about dynamic risk allocation. So if you're getting closer to the drawdown limit, reduce the amount of risk you take on each trade. Just give yourself more breathing room and more time to work yourself out of drawdown. You guys got any questions so far? I'm just looking to invite Ahmed now to speak about his experiences with trading, so flipping smaller accounts and also trading on a fund account. Whilst I do that, I might as well share the link for this template. So I got a question in chat. How do you measure risk when using margin? So actually, when you're trading on a fund account, all you need to input is the position size. You don't consider the margin or leverage. So it's the leverage is based on cost margin only. So what this means is you just need to calculate your position size, and I said previously that you can use the cashback forex lot size calculator to calculate your risk. So let me demonstrate actually. Alright, let me just form an example trade setup. Right, say I'm looking to long Bitcoin, this setup, current entry at 29885, stop loss 29,800, targeting 30,060. So what you do is you type in BTC, type in the current market price, and then you type in your stop loss price. So 29,800. Looking to risk 1% this trade. Click calculate, and the position size is 11.76 BTC. That's quite a large position size actually, and a fair bit above what I usually risk these trades. So perhaps I'll risk 0.5% instead. So 5.88 as the position size. What do you suggest as roadmap for beginners completely new to technical analysis, learning instead of depending on signals? So trading is obviously a long-term journey, but I can recommend joining our Discord community and learning from other traders as well as the education posts we have available. So if you go to education posts, I can see that we actually have a large library of resources available for you to learn analysis and trading. So just last week we released the Smart Money Concepts Guide, where I went through from start to finish how to analyze the markets using those concepts. We also have like guides for other things, such as reading price action, and even like other trading approaches like using EMAs and trend lines. So yeah, that's a good starting point. We have a lot of resources available for you to use, and if you've got any questions, you can of course ask our Discord community. We have a lot of experienced traders in our Discord, and you can feel free to ask any questions and ask for their input. And yeah, nowadays there's also a lot of videos teaching you technical analysis. A channel I can recommend is called T-Trades as well. He has good videos, about 10 minutes long, going through different aspects of smart money concepts. Alright, cheers Pascal, see you next time. Any other questions with fund accounts or trading in general? So it looks like Ahmed isn't available to talk today, but we'll stream again next week, and he can share his insights then. You can look forward to that. Alright, awesome. Thanks everyone. We can talk more about fund accounts in future streams, but that pretty much is it for today's stream. Just wanted to cover the basics of trading fund accounts, in particular how it's different from trading a personal account, and just understanding the rules, the approach to trading on a fund account. So if there's no other questions, I'll probably end the stream here, and I'll see you guys next week for the next stream. We'll probably be going through some live market analysis, and we can talk more about fund accounts then as well. I'll hang around for a few more minutes in case anyone got questions, but thank you for tuning in today.